There's recently been a lot of discussion spurred on by a number of new indices on what the definition of infrastructure is. At RARE, our definition's always been consistent and always been exactly the same since our inception in 2006. What's key to RARE is understanding the underlying cash flows of the infrastructure assets we invest in, whether they be regulated utilities, regulated infrastructure, or concession infrastructure or concession utilities. What's important is we understand the volatility of those cash flows and the movement of those cash flows over time so we can adequately forecast those going forward. The RARE 200 is the value strategies universe. It is not an index. For us, the RARE 200 is our core stocks for investment in the portfolio. So my background is 13 years of experience as a utilities analyst, 5 years at RARE Infrastructure, looking at utility and infrastructure stocks all around the world and across a number of sectors. What's important is to understand the regulation, to understand the underlying cash flows, to understand the contracting nature, if necessary, to form an understanding of whether we should be investing in these stocks. Utilities in the RARE 200 can be defined and classified in a number of ways. At one spectrum, we have regulated utilities, such as Spark Infrastructure or Severn Trent, where a return is earned off a regulated asset base. There are forecasted volumes and other metrics which allow the regulator to monitor how this company is providing their essential services to their customers. At the other end of the spectrum in the RARE 200 are contracted utilities. And these contracted utilities, for example, like TransCanada, have the ability to earn a return through a take or pay contract which allows them a stability of cash flows and a lack of volatility in those cash flows going forward. So what we don't invest in are those utilities that have commodity exposure or have exposure to competition or power prices. Starting at commodity exposure, stocks like OneOak, stocks like Cheniere are both exposed to the volatility and the nuances of movements in commodity prices and commodity volumes. What that means for us is that we can't forecast those cash flows going forward with any great confidence, and as a result of that means that they're excluded from our RARE 200 universe, but may appear in many indices out there. Looking at the other side of the coin, generation assets can be competitive. Generation assets obviously have the ability to have volatility in their output, and as a result of that, we can't adequately forecast merchant generators or competitive generators' outputs going forward. What that means is stocks like E.ON, RWE and Centrica won't appear in the RARE 200, but do appear in various indices out there. At RARE, our utility definition is strict, and what's important for us is the transparency and forecastability of our cash flows going forward. At RARE, it's all about delivering risk-adjusted return to equities for our investors and making sure we understand those cash flows and those underlying essential services that will drive utilities.